Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The dollar index is consolidating off of yesterday's low, the lowest level since October. Remember, we got some dovish Fed speak from Bullard. We got more from Bullard today. He really is seeming to be the biggest dove out there in the Fed right now. That old dove, Charles Evans, the Chicago Fed president, who dissented back in the end of 2017 in December, he's not as dovish as Bullard. In fact, he could be even considered on the hawkish side. I mean, he is calling for a potential rate hike this year if the data confirms it. So keep an eye on these two, as they are. Bullard and Evans are now voting members in 2019. So we've seen the dollar consolidate higher today. Early data out of Europe this morning, industrial production from France missed pretty big. That didn't help the case for the euro to stay at those levels. The ECB minutes, nothing really new from there, but it's more, they are somewhat hawkish. They are upbeat on, or optimistic more so, I guess that would be the right word to call it, optimistic on growth, but we need to see that being confirmed from some of the data. Factory orders this week, industrial production from Germany certainly did not confirm that. However, retail sales was good. So we'll have to continue to watch the data coming out. But the big thing today was Fed Chair Powell. He spoke in Washington, and really what we got from him was continued patience on rates, but he really exuded that momentum, and the economic data is still carrying over. And listen, we can't argue with that because we've started to see some bad data, but three's a trend. So over the next 30 days, it's going to be important to watch the data that comes out. And does that confirm or deny the sort of the growth rhetoric that we're hearing still from the Fed? But so keep a close eye on that. What we're also going to look for tomorrow morning is a big number in CPI. What hasn't grown is that CPI read, because we've seen sort of soft numbers not meeting those expectations, and that core number for 3 months running now. So watch that. That hasn't really confirmed. If their whole rhetoric is tightening and hiking rates because inflation's there, that doesn't really fit quite yet anymore. But they are confirming that they're going to continue to run that balance sheet off, and that really helped move the dollar higher. It also, for a moment, shook equities a bit. So keep an eye on that scenario. And again, CPI tomorrow is going to be the big read, 7:30 a.m. Central Time. Watch out for that. And then really, we'll have a lot of data tonight too. But for the dollar index, the 95.5 is going to be a big level to watch on the way up. There's a couple indicators that are aligning right there. If we close back above 95.5, you also start to close back above that trend line that we broke down on a weekly basis. You don't want to do that. We need to confirm this potential downtrend in the dollar. So watch for this if it can continue to roll over. Now with the euro, it sort of aligns with about 115. So watch for 115 in the euro as well. Those are some pretty interesting, very important numbers to watch on a closing basis into tomorrow. Now the yen retreated back. We do have data coming out of Japan tonight, but it's more on a risk scenario. The equity markets are pushing higher into the close today, so the yen did back off from the highs. It's in the middle of the range. It's still constructive. It held major 3-star support. It is seeing some resistance up there now against 93. Watch for this, and again, it's going to be about the risk sentiment. If the equity market starts to falter a little bit, and if the dollar stays below 95.5, the dollar index, the yen should benefit from all of that. We should see the yen get back above 93 on the week. Now moving on, for the Aussie, the Canadian, we do have a lot of data coming out of Australia tonight. We talked about this last night, that these two currencies have rallied quite a bit over the last 5 sessions, and it's not going to be a surprise to see them come back in a little bit. The Aussie, we did move our, what was a major 3-star level at about 71.85. We reduced that to a 2-star level earlier this week, but it's still a very strong resistance level. The Aussie did stick its head out above 72. Today, it did retreat as the U.S. dollar strengthened. Watch that Aussie. Again, we think it's a little overdone. We've been bullish on that capitulatory sort of move last week, but don't get caught buying the highs. Wait for this to settle back in a little bit. As we said yesterday, we wouldn't be surprised for the dollar index to the U.S. dollar to strengthen just a little bit here from Powell and buy the rumor, sell the fact. And again, that's bringing those risk assets back down. Gold is lower on the day. Treasuries are lower on the day. The Aussie's lower on the day, and so is the Canadian. So we head into tomorrow. Don't chase moves, but look for some of these to come back in. We've been very neutral to Canadian, to touch on that. We don't think you really want to start chasing that, but crude oil has played a big factor in the Canadian because that is the one commodity on the board right now that is really surging and has continued to push higher even after this Fed meeting. or the Fed Chair Powell speaking. Give us a call. We're here to help. We're here to help talk about anything on the market, help manage risk, as well as potential trade strategies. Give us a call, 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thank you.